to as close as it was at one point of time. Coming back to Sandhar and our results so far. So first of all, there is some good news, and the good news is that quarter on quarter, and I must qualify this with the fact that the last quarter we were closed for almost 60%, 40% of the time, and we were operational 60%. So end of April to beginning of June, we were kind of closed. So there were no operations. However, having said that, we have registered a growth of about 217% over the quarter of last year, where the industry on an overall basis has grown by 138%. So I think we have outperformed the industry per se. If you look at our EBITDA numbers, they are at 32.68, which is up 371%. Cash profit is up 576%. And of course, there is cash EPS as well. So overall, keeping the fact that we could not operate for over 40% of the time, we seem to have done well. We obviously also tested our break-even, and that was a good fundamental thing for us to actually judge in practical, where we've been profitable in this period of time as well. So that's where we are. In terms of what our outlook looks like, I do believe that we are looking at a growth of something like 30% for this year over last year in terms of revenues, and of course much higher numbers in terms of EBITDA and profit after tax. We expect this growth of CAGR to continue, not only for this particular year, but with the readiness that we have and what we hear and see in the industries, along with the orders that we procured. We do believe that a 30% CAGR growth is definitely achievable, not only in this year, but subsequent years as well, over the next 3 to 4 years. So I'm going to leave it there and then take question and answers so that I can be specific about what everybody wants to know. Nikhil, is that okay?
Sure, sir.
Can we take question and answers?
Sure, we can.
That will cover most of this stuff.
Thank you very much. So we'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Good morning, sir. And first of all, congrats for the same set of numbers in this tough time. My first question is related with this gross margin that has improved quarter on quarter basis despite higher RM cost environment. So what is the reason for expansion of this gross margin, and will this margin be sustainable ahead?
Well, Abhishek, thank you for that question. I do believe that while you have all seen the rise in commodity prices throughout the system, in terms of the actual effect that has come to us, it's less than 1 crore rupees. We've been able to manage this in terms of bringing in a lot of frugality in our design concepts, in the way we've approached and the way we bought and hedged our raw materials. We do believe that there will be a definite benefit as soon as these commodity prices start to slow down or reverse in the next quarters, where we will get benefits which will be several times of what we have been impacted with even in this, and therefore gross margin is definitely sustainable but even growable.
So during this quarter, gross margin has improved to the 44%. So going ahead, that range would be in the same like in a 44 to 45.
I would expect that, Abhishek, to be like a benchmark for us now, and obviously our efforts will be to improve that on a controllable basis with some of the measures that we have taken, which should improve the overall scenario.
So in these conditions where we are looking at 200 to 300 bps expansion in the gross margin, what is the your guidance for the EBITDA margin for the coming quarter?
Well, EBITDA margin, you see, if I compare it, if you remember, we were a company that was doing 9.5% of margins throughout. We do believe that the margins that we had in the last quarter, not this quarter, but the quarter before that, and the one before that, which were over where we'd expanded by almost 200 basis points, that is sustainable for us in the long run. So our efforts will be to retain margins of somewhere between 11 to 12.5% in terms of EBITDA margins.
Okay. So despite hiccups, aluminium die casting business outperformed versus the industry growth in this quarter. So what are the key reasons for the outperformance?
Well, I'm very happy to announce that the aluminium business has been growing, and the margins there have been improving on account of, you are aware that we work with aluminium in our overseas operations where we do extremely precision and high engineering level of componentry, where the margins are definitely higher than our peers. We've been able to bring those technologies into India, and based on that, we have received new orders from TVS. We have received orders and we've started supplying, so that's a big thing that has happened this quarter. Our supplies to Honda motorcycle have started in the aluminium domain. And this is a business which is growing, and we do have this to be a continual growth arena which has taken up from the investments that we had done in the past. So this will continue to grow.
Okay, sir. So this quarter, despite flat revenue quarter and quarter in the subsidiaries, margin has gone down by the 100 bps. So what is the reason? Is it because of the new plant in the Romania? Because what I am looking at, employee cost has gone up.
Are you talking about joint ventures? Which one?
I'm talking about the subsidiaries in Barcelona.
Yeah. In subsidiaries, if you see, our margin has actually gone up, Abhishek. Our margin has actually gone up, and we do believe that going forward, this will be even growing further. Our margin, our EBITDA margin, if you look at the scenario, our budgeted numbers are almost 70 basis points higher than what we had in the last year. And there our EBITDA margins are over 13% now.
Yeah, that is 13%. But last quarter it was 13.6%, and Q3FY21 it was around 14.3%.
That's right. So again, in the overseas markets, because we are on mature commodity levels and commodity prices, and that's commodity business with aluminium. There, our costing happens with the customers once in 6 months. In India, we have it once in 3 months. There, we have it once in 6 months. So the impact of that comes a little later. But if you look at it from a perspective of our operations, our actual other costs are actually going down as a percentage of our operations. So we will definitely get this a lag sometimes in the overseas. Like I said, even our payment terms there, in many cases, are 180 days. Yeah. So the payment cycle and the lag cycle is what is pulling it down at this point of time.
Okay, sir. So my last question is related with the cabin fabrication business, which has seen a sharp degrowth in quarter-on-quarter basis. Despite that, you have won several new business. So how's the revenue guidance given you won the many new business last year?
You're talking about the fabrication business? What are you saying?
Yeah.
What is your question again, Abhishek? Sorry.
Sir, during this quarter, revenue performance from cabin fabrication business was quite big.
Yes.
But you have won many new business in this space. So just wanted to know how is the revenue guidance for FY22 versus
We are looking
21?
at a growth of anywhere between 15 to 20% growth in the cabin and fabrication business for the entire year, and with an improvement of over 100 basis points in terms of our margins, in terms of EBITDA margins.
So what is the current EBITDA margin in the cabin and fabrication?
In the cabin and fabrication, last year we did a margin of 6.7%. We are looking at growing that by 100 to 150 basis points.
And is there any other headrooms for the margin expansion in this business with the benefit of the operating leverage?
Yes, there is operating leverage coming in. There are orders that we had taken, which we had shared with you. Those become active right now. But you see, what has happened is because of the first quarter taking away some of the sheen, this again is a business where we will ideally want to operate at levels of 10% and 11% EBITDA margins. We should go back that year as soon as we have a stable year. But in this year, definitely 100 to 150 basis points improvement over last year EBITDA margins is definitely on the cards.
Thanks, sir. I come into the question here again.
Mm-hmm.
Thank you, sir. That's all from my side.
Thank you. Thank you, Abhishek.
Thank you. Reminder to the participants, to ask a question, please press star and 1 now. The next question is from the line of Nikhil Kale from Axis Capital. Please go ahead.
Yeah. So, sir, had a couple of questions. First was on the demand situation. So, I think what we're seeing is that the two-wheeler demand, PV demand has been relatively stronger, whereas on the two-wheeler side, there has been some weakness there. I just wanted to get your view on this. What are you hearing from your customers? How are they looking at over the near term and maybe heading into the purchase season? How are they thinking about demand? What is the on-ground situation?
Well, the information that I have is again kind of mixed, Nikhil. While the orders now starting from the month of August onwards seem quite strong. Now, whether this is demand which is being facilitated on account of the festival season, that's only a couple of months away, and people want to build stocks. But there is a mixed bag there. Let's look at the two-wheeler industry. The exports are definitely an area which is of commendable rapport this time. They seem to be going up, not only for one, but typically for all, except Enfield. I think exports for everybody has grown and will continue to grow. The order books that we have now for the next 3 months seem quite strong, and we typically have our understanding only for the next 3 months. They seem kind of strong at this point of time, whether it be the TVS or whether it be Bajaj or whether it be Hero or whether it be Honda. We now started considering Honda because it is becoming one of our big customer players. Honda has grown, you've seen, by almost 20%. Some of the others have also grown, both TVS, Bajaj. Enfield has been slow. Hero has been a little slow, but Hero, the activity that I see or the information that I get from the market today, the next 3 months look kind of solid. Where cars are concerned or PVs are concerned, as you put it, they have been impacted by the semiconductor shortage. And that is not abating as of now. From the dealers, again, it's a mixed bag. You've seen cars or some Toyotas and Hondas not doing that well. But Maruti started to pick up. Honda has started to pick up. Mahindra and Mahindra seem to be doing well. So it's going to be a mix and match for us to be able to see how things are. Tractors seem to, while they've done well, the projections that I see are a growth of something like 4 to 5% only in this year. compared to what was anticipated at one point of time. So overall, I think it's a mixed bag. Obviously, compared to last year, there will be growth. But at one point, the industry was talking about growth of close to 25%. I think that number is abating to 15-16%. We, on the other hand, are quite confident, like I said in the beginning, of doing over 30% growth over last year.
Okay, thank you. And sir, I mean, the 30% number is really happening to hear. I think you also talked about the similar cases going forward. So I think in the past you've talked about significant order wins. If you could just kind of help us get an understanding, if you can give us some numbers around the same, especially on the side, what kind of orders you have won and what kind of revenues are you looking at over this year and maybe next year?
Nikhil, thank you. Three areas that we've opened up with Honda motorcycle. One is the area of die castings, as I had spoken to you earlier. This is significant business, and I do see this business itself within the next 1 year to go up to a level of maybe 100 crores, so which is significant. We are looking at the same level of business with sheet metal. Again, the orders that have been received only in the last week, and we expect supplies to begin somewhere in the month of September. We are also very close to signing off on with exports going up, the design and quality of their higher end motorcycles need a different ball game in terms of their proprietary products, which in our case are locks and so on and so forth. So we expect that business. Between these three businesses, they will be significant businesses and add to our revenue. I would expect Honda motorcycle to be at least a 10% business overall.
Over what time frame, sir? In the next couple of years, or?
No. I am looking, yes. Obviously, we are taking off now. There are some models which launch off only in the beginning of next calendar year. So in the next year, yes, that's the number that we will probably have in place. In the next 2 years, we will definitely have them at 10% of our revenue pie.
Okay, great to hear that. And sir, I think in the presentation also you have kind of outlined information of the products that you're doing for the EV OEM. So if you can maybe just talk about that, what are the current products that you're supplying, what OEMs you're doing, working with, and also discussions. I think you've highlighted Ola as well. So if you can just highlight the opportunities that you have in terms of kit value that you can supply.
I had, even in the last meeting, had said that we were very active with the EV industry, and both for product lines that have been there for the previous generation of vehicles as well as the new aspects which are now erupting. If you look at what we've done, we have done a revenue of close to 12 crores in this quarter for the EV industry. Obviously, and then I also mentioned that this is typically, we worked only for 60% and 40% we were kind of closed down. So it's easy for us to kind of capitulate for the entire year. But if you were looking at what kind of componentry, it's being done both from our Indian operations as well as from overseas operations. Supplies have already started to Ather, to Ampere, to Michelio, to Kabira, Electrics, TVS, for, let's say, ignition switching systems, hook and striker, latch systems, mirrors, wheel assemblies. From our international scenarios, we are supplying to Joyson and Autoliv and TRW, which are seatbelt retractor components, wiper system components, electronic circuit housings and covers for Lear, for TRW, for Continental, for Bosch. So this is something which is already active as we speak today. What we are looking now to do, where we have received the orders already, but supplies have to begin and initiate. These are for companies like Simple, Strom Motors, NDS, BG Gauze, Graviton, Kosalva. Again, for battery locking systems, for mirror vision systems, door handles, latch systems, ignition systems, and so on. We have signed these binding NDAs for detailed technical discussions which are happening with Okinawa, Polarity, Hero Electric, Ola, Ozotech. So there is a lot of work that is going on, and we do believe that electric vehicles, and as and when they shape up in taking up a substantial percentage of the markets, we will be amongst the top players supplying to them. Going forward, most of our joint ventures, you are aware, are doing a lot of work in electronification. This is whether it's supply of relays or whether it is rear view cameras or ECUs or sensors, shark fin antenna, feeder guide. These are to Honda, to Mahindra, to SML Isuzu, to Hyundai. And again, these continue with even electronification is happening even for consumer demand. So some portion has started going to a little non-auto stuff. And that is again building up as we speak.
Okay, great. And then just lastly, coming back to the revenue growth expectation that you talked about, which is around 30% kind of a CAGR.
Yes.
Now, I think in the past you have talked about that the capex will be limited to depreciation and that you have sufficient capacity in place to maybe achieve 40% incremental revenue. But given that we are looking at such strong numbers, maybe over the next 2 to 3 years, do you feel that what kind of capex would you be looking at? If you could just maybe talk about
that. I will reiterate again the same thing. That our depreciation is to the levels of about 90 to 100 crores. And that is the capex limit that we have put on ourselves for spending. However, having said that, there are two elements which may not get covered in this, which are over and above this. It could be either inorganic growth, and inorganic growth could come in terms of some acquisitions or something like that, or it could be absolutely new product business, which is a new project. For example, if a company were to approach us and say, well, this is a new kind of componentry, a new genre of parts, and this is what we are helping you do with technology available from somewhere under a CC. That is inorganic, or let me say that is more brownfield than anything else. Those kind of investments we haven't taken into consideration at all. But again, why we haven't taken and what is the reason for doing that is those lead to a separate business trail on its own, which will get merged in the future. But for all the businesses that we've spoken about, the business that we are looking to do, we are very clear that we do not want to expand over the level of depreciation that we have during the year. And the 30% growth that you spoke about is not taking any inorganic platforms into it.
Okay, so that's completely of the existing products that you have.
That's it. It's existing product lines. I would not say existing products. I'm not saying, for example, if HMSI has given me business which is aluminum casting, there could be expansion in terms of machines or so on and so forth, but they fall within this ambit of the depreciation plan.
Okay, got it. Thank you.
Thank you. Thank you.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Sir, what is the reason for the underperformance of your core business, locking and the vision system in first quarter? And what would be the key growth drivers for this business in next 9 months?
Well, what you're talking about is the automotive vertical, which is the vertical which is the one that supplies locks and mirrors, right? That's what you're saying?
Yeah, yes, sir.
So if I can give you what our guidance is going forward, we see this year to grow, like I said, at about 28%. The revenue is a little taxed in the last quarter, largely because some customers were operational, some customers were not operational. So while we did close down for a period of entire May and some last portion of April and beginning portion of June, Even then, some customers, like I said, operating in certain states were doing better. Tamil Nadu, for example, did much better than somebody who was in Maharashtra in terms of output. So there is a little, disconnect there. And obviously, because we supply to specific customers in some sense in arena, we can look at an overall picture, like I spoke in the beginning, saying that we have grown at 271% over 138% of the industry. But this 271% is kind of imbalanced because some customers have probably done much more compared to some of the others. So in this particular case, automotive, which is a supplier largely to the customers which were in Maharashtra, for example, whether it is Tata Motors or some of the others, did feel a larger pinch compared to some of the others in other states.
So, sir, Honda car, which is one of the key customer of Sandhar, so just wanted to know that how much revenue and margin you are targeting for FY22. As that FY21, that was the weak numbers because of sharp fall in the Honda cars volume. What is the outlook for this year?
Well, again, the way I look at it is that HSCI division business, as we call it, or which is Honda business, will, in terms of revenue, should grow at about 35% odd. And the margins are going to be probably a little lower because of the fact that the models that they have in state are not the models which we have higher margins in. So I would expect this particular year to continue with low margins in that particular business, and the effect of everything changing happens in the new models which launch in the year 2022 calendar, which will effectively go in the year financial year 23. So Honda will continue to be an abated business even in this year, even with the increased revenue.
Okay, sir. My next question is related with our JVs. There are a number of products which are in high demand that is produced by the JVs. However, the company is not able to scale this business in last couple of years. So what is the plan to scale JVs business and turn it profitable? And how much loss can we expect this year from these JVs?
See, the JVs have started to ramp up, but they are like little babies right now. And any impact of a slowdown does impact them more. So that the last quarter, obviously, they were affected much more than a stable business, Going forward, I do believe that out of the total number of JVs, 3 JVs will turn profitable this year. So, and some of them will be in a stabilization. So our losses will definitely be lower than that of last year. However, in terms of the entire JV bandwidth, it will continue to be in loss.
So last year the JV losses was around 11.2 crores. So how much?
Yes. So this
losses
year we are looking at that number to be lower than that.
So it would be around low single digit or in a mid single digit?
I would say it would be high single digit.
It's a high single digit. Okay, sir. And sir, in a sheet metal business, you have added Honda Motors. So just wanted to know that who are your key clients in sheet metal business, and what is your opportunity size is there?
Well, we are looking at sheet metal business to expand quite rapidly. With this was a business in terms of, so I'm not calculating cabins and fabrication in other business. This business was around 200 crores for us. But with new orders from Honda and with TVS, we are targeting a 500 crore revenue in the next 2 years.
And who is the key clients right now, apart from the Honda and TVS?
Right now is Hero.
Okay.
Right now, Hero is the majority customer in our two-wheeler sheet metal business. We do a little bit of Enfield, But both TVS and Honda will be the new customers, are the new customers.
And what would be the incremental revenue from these two players in FY22?
We would in FY22.
Yes, sir.
FY22 is we are now, supplies will start begin. So you're aware there are PPAPs and there are pilot lot supplies and so on and so forth. So the impact on a large basis will come only in the last quarter of this year. But I would expect that the next full year we will get the entire benefit from both Honda as well as from TVS. In the meantime, Hero is growing as well. So Hero has given us some new orders as well. So that business in itself should also grow quickly.
Okay, sir. And sir, you have won many new business from the Hyundai in a different segment. So can you throw some light on it?
Well, I can throw light on the perspective of where the growth is going to be. So we have a lot of joint ventures, and we see that this particular year on our JV front, most of our JVs will have significant improvement on the volumes that are being looked at. So, and Hyundai is one of the largest beneficiaries, or we are the largest beneficiaries from the Hyundai joint venture, our joint venture supply model. We see that while, like I said, in some cases our growth is likely to be in more than hundreds of percent, the size of the business is still small. So on an overall basis for the entire organization, JVs will, while they will grow by about 3 times of what or 4 times of what it was last year, the overall pie in the revenues of Sandhar consolidated or put together will still be comparatively smaller.
Sorry to interrupt. May I request Mr. Abhishek Jain to please rejoin the queue, sir?
Oh,
okay. Thanks.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, good morning, sir. Sir, in
morning, Shashank.
Yeah, sir. So in the presentation, you categorically mentioned that you're strongly looking for inorganic growth opportunities. So just want to understand, so have you already identified any target and what are the characteristics that we look for it? Because we have run our business in a very capital efficient way in the past.
Yes. Well, you're talking about inorganic, right?
Yes.
Yes. So we are at this point of time evaluating several opportunities, some of which could be called very close to closure. But unfortunately, in this call, I'm not at liberty to talk about them. Suffice to say that we have our war chest ready. The targets have been identified. But in my experience of inorganic growth, especially in terms of acquisitions, till the day we really take over the plant, there have been opportunities in the past where we've actually signed off and the deal has not gone through its effectiveness. So suffice to say that yes, we are ready, we are evaluating. These are exciting products. And the reason why we do acquisitions or any other kind of inorganic activity is largely to increase our wallet share to either our existing customers. So there could be products that we don't make today, but they add to our wallet share. Once they come into our wallet, then we can spread them around in all the customers that we have. In some cases, new products mean we add customers that we don't have today, in which case not only then we continue to supply them with the acquired companies' components, but also add our own product line to those customers. So either it is component acquisition, or it is customer acquisition, or it is new technology acquisition. So these are the frontals and the basis on which these inorganic steps are typically taken.
Right. But so then, so what is the expected payback period that you're expecting, or threshold that you would normally work while acquiring a particular company?
Well, now I think, we are kind of mature in the way where we are, and we are very specific that anything that we do needs to have an asset turn of 2.5 to 3 times. We are clear that our return on equity and return on capital employed should be between 20 to 25%. So these are fundamental Bible rules that we follow whenever we are going in for something like this.
And so the quantum can be what? Something like 25% of our current top line, something to the excess of what, 500 odd crores, or any colors on that one?
Well, like I said, in terms of we are evaluating multiple such opportunities, depending on which and what. But suffice to say that the number that you mentioned is in pipeline, either as one opportunity or a combination of a few.
Right. Secondly, sir, you have a habit of outperforming the user industries, right? So last year we just did on 3-4%, whereas the industry was declining to double digit. So this quarter somehow, sir, our growth has been below par sequentially with what OEMs have done, right? So
that's not true. That's not true. I started this meeting by giving you that the industry has grown by 138%. Our revenue has grown by 217%.
Right. So, that particular aim
so that's a misconception.
Okay. So we do.
If you want, I can give you breakups.
Fine, sir.
I can give you breakups. We have in two-wheelers, the two-wheelers have grown by 117%. We have grown by 188%. In commercial vehicles, the market has grown by 243%. We have grown by 467%. In the construction business, they have grown by 106%. We have grown by 318%. It is only in the four-wheeler segment where the segment has grown by 290 and we've grown by 252. But in an overall picture, we have grown by 217% with the industry growth of 138%. I hope that answers your question.
Right. So, sir, in the four-wheeler segment, anything which is negative for us in terms of
it is not negative. Let me just say, like you said, a question that I answered a little while ago was with Honda. Honda hasn't managed to grow, and that is probably the reason why it has been a slow mover amongst the other PV growths. And we are attached to them, so that has obviously affected us a bit.
Right. So then you mentioned that you're supposed to grow 30% organically for next 3 years, right? So then in 23, we're targeting a revenue of something like 3,000 crores, right? And a PAT of maybe around about 200 odd crores?
Yes, I have given you a number. It's easy for you to calculate. Unfortunately, I can't give you numbers directly, but I'm giving you an outlook, and we are very confident of a 30% CAGR over the next 2 years.
And so, lastly, at what stage are we with Ola Electric, and what components are we talking with them? And how confident are we to really get the orders?
Well, we are industry leaders. You are aware in the two-wheeler segment. So there is not a two-wheeler that we don't supply to today. And going forward, obviously, these are any new player has to have a pit stop with us. So what we are talking with Ola is obviously ignition systems. You're aware we are the largest lock player in the world. We are the largest mirror player. The latch systems, the USB chargers, some die casting components. These are what are being discussed right now.
Yes, sir. Thank you so much, Vishnu.
Thank you.
Thank you. The next question is from the line of Amarkant Gaur from Phillip Capital. Please go ahead.
Sir, thanks for taking my question. Congratulations on decent numbers. What I wanted to know was regarding the shark fin antenna business.
Yes.
So there are a couple of developments there that Minda has formed a JV with Infast, which is probably a supplier for Hyundai and Kia in Korea.
Mm-hmm.
Do you see that as a threat to our business with Hyundai in India? And if you could just discuss the overall business opportunity in this segment and what is our market share and how are we going to improve on it? That's my first question, sir.
Okay, let me just explain this to you. So Our joint venture partner is Winnercom. And Winnercom is the largest supplier of shark fin antenna to the Korean world. And also is now ventured into the Japanese car market in a big way. So as we sit today, we are currently the sole supplier to all the new models that have been introduced by Hyundai over the last 6 months, and continue to be the only supplier who've been shortlisted for all products that both Kia and Hyundai are planning to launch in the next 12 months. In fact, which is the company that you're talking about, has been in India in the past, but suffice to say, when I say that we are confident that Winnercom is with Honda and Kia in a big way established, we are the one who jointly developed the technologies for all these new ones, and have been very well accepted in all the other OEMs who are under finalization stages of design with us for their models. So we continue to be the fourth leaders here, and therefore, there are two other players from Japan who are importing right now. We are probably the ones who are locally supplying, and our customers seem to be very happy. I cannot tell you more about what the competition is doing, but I can only tell you that we have all the new models that are in the pipeline for launching of both Hyundai and Kia, and are also now talking of exports out of India to some of the European OEMs.
That's great to hear, sir. If I can just add a little bit to my previous question, could you please discuss the kind of penetration we have for shark fin antenna in India currently, and how do you see that developing? And if you can throw some light on your market share, and how do you want to gain share in this particular segment?
Well, I may not have all the numbers because it is a radically changing scenario from having what used to be regular manual antennas to what were called pole antennas to what are now called shark fin antennas. And even within shark fin antennas, there are different kind of antennas. There are antennas that only give you FM, which is frequency modulation for your radio. There are some which are now carrying data. And then there are one which are also induced towards what is called ADAS, or automatic driving systems. Now, Winnercom, which is our partner, and our company Winnercom Sandhar, is the world leader in supplying these kind of antennas. So we are working, each OEM today is working on the next generation. So a lot of them are now moving away. You were aware that the antennas that were used previously were, you would typically pull them out or press a button and the antenna would come out. Then you had these little pole antennas which were fitted to the top of your car roof. And now the shark fin, as the name suggests, they are in the name of the shark fin. So shark fin is the latest technology, and it would be some period of time for the entire industry to move over to that platform. I see that not too far away, perhaps only a couple of years. And in that, we need to be a market leader in India. And that is the way we are going forward. And the speed actually of changeover is happening faster than what we had projected. So when we reevaluated our business plan for this year, post this the quarter, one of the areas that has actually grown in numbers to our expectation is the shark fin antenna business. Not only that, the budget that we had even before these stopovers, the antenna business is the one who has outperformed even in the quarter. So let me give you, our budget was 6 crores. We've actually done 6.53 crores in this quarter.
Okay. Why I was asking that question, sir, was to just get a hang of what is the total business opportunity that we can address. I mean, in this particular segment. So,
that is easy to calculate. If India is going to produce 4 million vehicles, and the average price of an antenna is, let's say, 1,000 rupees, that gives you the size of the business.
okay. Thank you, sir. Thank you, sir. My second question is on the.
But I also must tell you something that I haven't added. There are RF antennas which are now being put into motorcycles.
Okay.
And that is an added thing that we are latching onto as we speak.
Okay, that's great, sir. And sir, if I can add one more question to that, could you share what kind of utilization are you expecting on this quarter, during this quarter, based on the client orders that you already have, or the orders that you have received for the next couple of months from your clients?
See, that's a very difficult question, because you would appreciate and understand that we are into hundreds of products. And, with part numbers and this, that, and the other. Depending on the model in play, depending on the vehicle OEM in play, these could vary. But suffice to say, if I was to look at the overall picture and give you a bandwidth, we are probably at somewhere around the range of 70% capacity utilization for this year.
Okay. That's it from me, sir. Thank you so much.
Mm-hmm.
Thank you. The next question is from the line of Nikhil Kali from Axis Capital, please.
Yes, sir. So just one question from my side, which is more from a medium to longer term perspective. So if I look at some of your peers in the two-wheeler business who have, similar to you, have a dominant share in certain of the components, they have now kind of actively started to look at diversifying into PV segments. Now, obviously, we are already doing it through the JVs, where almost all of them are kind of focused on the PV side. But even in the main business, I think we have proven capabilities on the lock set side, whereas we have been suppliers to Honda, or even aluminium die casting, which I think is kind of emerging as a very good opportunity on the PV side. So how are you looking at it for the main business in terms of opportunity on the PV side? Or initially does the pricing and the profitability would not make sense for you? How are you looking?
Nikhil, honestly, I have said this in the past. We are very clear about one fundamental thing, that we don't actively chase four-wheeler business or two-wheeler business or commercial vehicle business or construction business or tractor business or anything like that. We want, so for us, if I make a commodity, let's say a die casting part, it really doesn't matter to me whether that fits into a piston of a motorcycle or of a car or here or there. It's a cylinder block, for example. I'm just giving you an example. So a lot of it depends on opportunities. It is quite possible that with Honda motorcycle now coming in, our share of two-wheelers output of the revenue pie might grow. Tomorrow, in case we get substantial business from a car OEM, it may grow. You're absolutely correct in what you're saying, that we have proven our capabilities. So on one end, we supply to a Hero, to an Enfield. On the other end, we supply to a Mercedes-Benz and to an Audi and some of the others that I'm not allowed to name, but you know where I'm going.
Yes.
So we've proven ourselves. So depending on the range and of the product that is put to us on the table, you will always see these movements that will go up and down. So I am not actively chasing, saying that, I'm only going to go for a four-wheeler business. With the new ESR, electric start locks that are coming in, they are of the highest category that India has ever produced. And we would not only be exporting them, we would be making them for the Indian market for high-end cars. So people are aware that we do all of that, and everybody's aware. It's just a question of what fits in when and where.
Got it. Thank you.
Thank you. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Sir, there are a few bookkeeping questions. Sir, how was the product mix during this quarter in terms of the passenger vehicles, CVs, and two-wheelers?
Well, two-wheelers, as we said today, is at 51%. Four-wheelers is 29%. OHV and tractors are 14%, and others are at 6%.
This is for the quarter one.
Yes, this is for quarter one. So this, like I said, could be distorted. This may not be a stable thing because, like I said, some OEMs were closed, some were not so, depending on the areas. But yes, definitely in any category, our two-wheelers is typically more than 50% of our business.
Okay, sir. And sir, what is the current?
Just the indication.
Got it. Sir, what is the current gross and net debt of the company?
What is the what?
Gross and net debt of the company?
Well, I'm going to call upon Mr. Jain to answer those specific questions.
Yeah, sure, sir. So currently we are having a total gross debt of 273 crores at a console level, including our overseas operations.
And net debt?
Pardon?
Net debt of the company?
If you say the net debt of the company, like the gross debt, I mean, it's the gross debt that we are talking of. Net debt remains the same. I mean, the total, it's the borrowing exposure is the same.
Okay. So just wanted to ask that how much cash in the balance sheet right now?
We have generated positive cash flows in this quarter also. We have if you say the cash profit, there has been a cash profit of 39. Just a moment. We have generated a cash flow. Yeah. So our cash profit has been 29 crores in this quarter.
Thanks, sir.
Yeah.
Thanks, sir. That's all from my side.
To your question of debt, like Yashpalji said, most of the debt is in the form of working capital for our overseas operations. Exactly. And this is because I spoke in the beginning that our payment terms there are 180 days.
Okay. Yes, sir.
Okay. So if you were to look at our debt, today our debt is at 4% levels, is the cost of debt. And large part of that debt, in case you look at Indian operations and the working capital and whatever, the numbers, Yashpalji, can you throw out those numbers of our long-term debt in India and short-term debt?
Yeah, sure. So in India, we don't have any long-term debts. It's the working capital limit that we are enjoying. It's 81 crores as of June 21. And as far as overseas operations is concerned, we are having a long-term debt of 94 crores in our Barcelona operations, which take care of our Romania expansion also. So for term loans, it's just 94 crores out of our 273 crores of debt. Roughly, you can say 1/3. Remaining is our working capital limits, which keep on fluctuating. Like in the month of March, in India, we are having a working capital limit of just 43 crores. But since in quarter one, due to current lockdown in many states, so some of the customers have rescheduled the deliveries, due to which we have taken an inventory. I mean, the inventory came into the stock, but which is already being liquidated in this current quarter. So again, our borrowing levels in India will be roughly around 43 to 50 crores in between, that too working capital limit with no long-term loans, unless there is an inorganic acquisition by it.
So I hope that clears your question, Abhishek.
Yes, sir. Thanks for your detailed information.
Thank you. Ladies and gentlemen, this was the last question for the day. I would now like to hand the conference over to Mr. Nikhil Kale for closing comments.
Thank you. On behalf of Axis Capital, I would like to thank the Sandhar management team and all the participants for joining the call today. Mr. Dava, any closing comments from your side before we end the call?
Nikhil, thank you, and thanks Ritija for putting this together. I'm glad that we are able to give some clarifications on the questions that arise. Suffice to say, we are quite confident of this year and things going forward. Of course, fingers crossed, and may God bless everyone with good health, and we don't get attacked by these third and fourth waves, which cause havoc to life as well as to the economy. So with that, I would want to close it and thank you once again for everything. And of course, thank my own team for being there in this meeting.
Thank you.
Thank you.
Thank you.
On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.